Growth in the businesses continues to do well. The confidence is there, which is certainly something we should be looking at going forward if it's at risk. But the earnings are still good. The repatriation's occurring. The tax reform is coming through. What we're looking at, though, is how much economic activity was pulled forward. And we may begin to hear...
By the threat of tariffs?
Exactly. So when we get into earnings season here in October and November, we're going to be listening closely to managements about, has there been any impact yet? What are they seeing? But currently, when we talk to companies, activity's still good. The summer's over, which is typically a slower period. Europe's back to work. World Cup's over. So there's a lot of catch-up business that we still think is going on.
You don't think there is a meaningful impact at this point? And
we don't know yet, because when we ask companies, they don't know. I mean, Dominic Chu did a report the other day on the Port of L.A., which I found really interesting. It's stacking up. So what are in those boxes? And I don't...
For the holidays.
Well, some of it, and probably some other activity which maybe was pulled onto the shore sooner. And those are questions we're asking companies. How much are in those boxes?
Charles, what do you think?
I think the market has expected and discounted the U.S. would implement this new level of tariffs and that China would retaliate.
So this is already baked in.
It's already baked in, right? And we would have seen further moves out the risk curve, higher S&P, higher NASDAQ, if we didn't have this trade conflict at all. Earnings are great, 25% in Q2, about 20% for Q3. You're going to have an EPS number for 2018 of probably 170 or north. Who knows what 19 will be. So markets were expecting it. It was already discounted. The fact that China came in saying the bracket on the tariff rate is going to be 5 to 10%, it's only 60 billion, is less than expected. So there's a bit of a relief. That's why Asia's up today again. And also the yuan is fairly well contained. It's not depreciating dramatically against the U.S. dollar.
What's the trading mentality right now? Is this a market you don't want to short? How would you describe it?
It's a market which is getting increasingly complex and difficult to navigate because of this China trade issue. It's unclear how it's going to get resolved. Investors are still betting that there is either a gamesmanship going on between key policymakers of each country, or that at one of the key events, either the midterms in the United States or the G20 that we alluded to earlier, are going to see a turning pivot point for the negotiations. I'm skeptical that that's going to happen.
Chris, what are you advising clients to do right now based on that uncertainty?
We've certainly taken more of a trading strategy in the last 6 months or so. We deployed a lot of capital over the summer when volumes were light and we could get some really good value. We've seen, the small caps do well since the summer, which has been great. But we've had to employ more of a trading strategy as we go into the midterms here.
Every time you see a dip, you buy that. Otherwise, you stand back. Or what is a trading strategy?
Well, we saw a lot of value when they were sold off on very low volume, so we deployed capital. But now we've come back up to a lot of moving averages, which are declining. So we're reevaluating some of the investments we've been in historically. One area that we keep an eye on is semi-cap equipment, which is an area where China wants to grow semis.
Right.
But semis in general have been a bit weaker, and can be a leading indicator to overall economic growth. We don't think the cycle's completely over, but it is a commodity where there is cycles in it. So you have to be careful.